Hey everyone, Bowen from Enhanced Asset Management here, just back with another quick little update today, and this update is just on your direct share position in AUB. Now, AUB released an update to the market last week, and there's probably a little bit to unpack here, so I'm just going to run through a few of the key points on screen with you here today. Now, the first key point that I just wanted to bring up was the performance of Tices, which is the UK broking business that AUB acquired around about this time last year. Now, they've stated that there's been a really strong post-COVID rebound in Tices' performance, and so much so that the organic revenue growth has exceeded their initial forecast by around about 10% for the first 6 months of the financial year. Now, off the back of this, AUB have decided to not proceed with a joint venture that they were initially involved in with another Australian-listed insurance company called PSC. Now, this joint venture was for both businesses to own 50% of Tices' retail segment. Now, this segment makes up around 25% of Tices' total earnings, so it's a smaller segment of the business. But because of this amazing performance from Tices over the last 6-12 months since the acquisition, they have decided to not proceed with the joint venture and have instead wanted to retain 100% holding in Tices' retail. Now, in order to fund this, they've decided to raise some capital through an equity raising, both through an institutional and a retail offer. Unfortunately, the retail offer was a much smaller component, only at $15 million compared to the $150 million of the institutional component. Obviously, we can only participate in the retail offer, which at an offer price of $24 a share represents around a 7.2% discount to the share price on the 17th of May. Now, this share price is now up at around $26.20, so the discount is closer to around 8 or 9%. Now, as I said, it's a much smaller component, the retail offer, so there's going to be a lot of demand for this at such a discount. We will be participating at the maximum level we can. However, we're pretty aware that we probably won't be able to pick up too many shares in this offer. Now, the last thing I just wanted to bring to your attention was the earnings guidance that they put out in this update. Now, I spoke to you back in February when they released their last earnings guidance, which was a great upgrade. Now, they've gone and upgraded their earnings guidance again, up to 120 million to 124 million, previously around about 113 to 121. So again, this has just been off the back of some really strong performance across both Tices and AUB's core business as well. This chart here, I think, shows just the amazing momentum we've had from Tices and AUB's performance over the last 6 months. Back in November, we had the guidance from 107 to 115 million, and today we're all the way up to 120 to 124. So that's some really strong upgrades in the past 6 months. Now, the best thing about these upgrades is the share price is representing them. So we've seen the share price grow from our initial position back in July at about $18, and we're obviously still up over $26, which is great. And with the equity raise at $24, we will be participating in that, and we're pretty bullish from that position as well. Now, as always, this is general advice only. If you require any further financial advice, please reach out to your advisor. Thanks, guys, and I will be in touch shortly. Cheers.